guess who is back today? It is an all-time high special return. It is Rocco, the fur baby himself, returning for the all-time highs. Thought it would be worth it. We'll get to it. The portfolio is chock full. I'll just tell you how I've been enjoying the rally. Life comes at you fast. We'll take a look at the 3-week bear market that was. I've been playing Taiwan, biotech, semiconductors, and Brazil. And it's just been a lot of buying every day, each day more than the next. I think I'm topped out for now due to turtle rules and correlation cap. So without further ado, let's get into it. It is all-time highs. It's a global thing. Things really, boy, did that accelerate quickly. So let us share the screen. It's been a little bit. It's good to be back. Thank you for joining. I hope you're taking speculated risks. There's a lot out there. Okay, let's get into this here. So this is a lot to get through. Today, regional, there's so many things I could have picked that have been ripping higher. Again, Iran stating that during the Lebanon Israel ceasefire, I believe that the Strait of Hormuz is fully open, and that absolutely had a negative impact on the price of oil and a huge lift to the markets. I could have selected many different 2.5 sigma moves today higher. The ones that were massive movers in the relief of oil we're going to highlight as regional banks, retail, and home construction. They were the 3 biggest movers in terms of standard deviation moves. Leaping, absolutely. While energy and oil dumped, we'll take a look at all these important charts and new all-time highs for SPY. Over 710 here. We'll take a look at the chart and SPY plus 5% for the week, averaging 1% a day. Today, up 1.5%. I don't think it's too late to chase. We'll take a look at the charts. New all-time highs for SPY, Qs, small caps IWM, South Korea. Can't wait to enter that one on Young. Tech, Taiwan, which is a hardware proxy for tech, which I'm in. SMH, I am in. And SOXX. So one is very heavy towards NVIDIA, the other is not. And they're all enjoying the rally and being fat and giddy. This week, when you step back, characterized by, and I had to approximate it, they're roughly 11 to 13%, but we'll go with the median there. An 13% approximate rally in Ark. So absolutely risk on. We'll take a look at Kathy Wood's fund, which had been struggling. Software, I've been calling for the death of IGV. We'll take a look if it's more than a death cap bounce. And South Korea to new all-time highs. We talked about it last Friday. I said don't forget the metals. It's what got you here in terms of alpha, as well as South Korea. And we'll take a look at the year-over-year markets because it is Friday. Okay, let's get to the charts. One sec. Oh, boy. All right, settle in, Rocco. We got a program. He's looking out. Okay, hang on. Go Sixers on Sunday, by the way. Beat those Celtics. I know it's unlikely. I'm a numbers person, but I do want to see Tyrese and VJ Max do amazing things in the playoffs. Okay, we'll get to SPY in a bit. It's been low volume. It's been low volume the whole way, but guess what? Price is 712 in SPY here, as you can see. 1.5% today is SPY. Oh, man, there's so much to go through. Tesla up 4.5%. Q's already mentioned. NVIDIA up 1.1. Microsoft up 1.5. Netflix down 10%, only read because the day after earnings, and Reed Hastings, I believe, stepping down from the board, entering philanthropy with his billions. Apple up 3%. Talked about that already. Amazon up 1.7. MicroStrategy up 12% on the back of Bitcoin eclipsing 76K now, finally for the first time in months. And MicroStrategy, a lot of Bitcoin is up. I don't think we're going to feature today. It was just outside the 2.5 standard deviation mark. So we'll see. They are bidding up Ethereum more. Ethereum still the best greed to fear indicator there is. I was just telling a trader, I view it as an inverse VIX. I think that's the way you should look at it too. Meta up 1.3, Palantir up 3.5%, Broadcom up 1 1/3, Taiwan Semi up 1, hence Taiwan overall killing it. All right, so intraday, they've been buying it all day. Hasn't been a massive volume. Each bar technically less than the one before, so they got super bullish at the open, and yet price took you higher. We have not considered touching. We haven't thought about thinking about touching VWAP on the day, and we just hit all-time highs literally in the past 40 minutes. Now that level was 712.38. We're experiencing a very soft sell-off here down to basically the top of the prior bar, the 12 o'clock bar. VWAP still going up about 4 cents per 30 minutes. As long as we hold 709.5, I think we could see, 713, 714 today, this Friday chase. more ceasefire signaling the end of the war. I was thinking when the SPY was up 5% or 4% in the past 5 days, and it was very interesting to look at the breadth. I couldn't find more than a dozen companies hitting 52-week highs, and yet today there is a plethora of all-time highs throughout different industries, industrials, tech. It's really, really vast, and that's what I said on Monday, I believe, or the last video. I said SOXX was putting in all-time highs in a couple of the global indices, and I said that's more than a good feel. That's breadth confirmed, visualized through price confirmation. So let's zoom out here and what we think for SPY. Again, things got dicey, and really you entered purgatory for SPY March 19th. And then when that 2-week ceasefire got announced on April 8th, the end of the bear market. And again, V-shape. I believe there's many reasons for this. Democratization through Robinhood and all that, the access, low commissions. When I started trading, I started trading in high school, basically. Commissions was $8 through Scottrade, and then more than 100 shares, you had to pay more. Commissions were maybe $40 for trades sometimes easily. And now it's free. And less people I think have a lot significantly invested in real estate, so they have a lot more disposable cash to deploy in these V-shapes more than ever, in any century. So we had basically a 3-week bear market, and this was important. We always got to follow the technicals. I wanted to see what kind of thrust, what would we have in many levels. I wanted to see what would happen when we got to the old cement floor of 680. It did a great job. It took 3 days from that gap of a ceasefire to hold it. And then afterwards, I said, okay, what do we have to do to break out above the former all-time high right around that 698 level? And that's what this past 2 days have been, led by tech and software. Look at this, 73.5 RSI. The candles look great. They're not getting that much smaller here, 1% a day. Will it take a breather? I know you're looking at the NASDAQ. NASDAQ's been up, I think, 13 days in a row now, which is a record. This, like it hasn't happened ever. S&P had that one. I'm looking at a flat day on the 10th, but basically the same for the S&P. So look at this. Talk about a V-shape. The low is the 30th. We've been up every day since the day after March 31st. So since that month end, that quarter end, it's been green every single day. I think maybe managers looked at their books and said the war is not going to last into the fall and really bleed into CPI. Let's buy. And that happened right there on the 1st. Rocco wants to exit the door, but they do not want to exit markets. Look at this candle. View up on the day, 708.70. The high is 711. 711. And that is it. So going forward, you can chase this right here. The ATR is $9. So $18, and it moves against you by $18 or so. So that takes you to, about 693, basically where I have my cursor, a little bit inside by about 1% from the former breakout. I would pull back because it's very likely to go a little bit lower to like 677. But what I'm seeing here, and again, the rally started, I'm a big 15 day cycle guy, but this is the definition of a rubber band going one way and then stretch. Look at this again, and this rarely ever happens. I forget who put out a piece on this morning on FinTwit, but we went from oversold to overbought. This is absolutely insane. So this is March 30th to April 17th, 18 days, 2.5 weeks of oversold, overbought. That is like, I'm a big Creed fan. That's like everyone mocking Creed in the 2000s and saying they're a joke, and now they're selling at arenas and it's like $200 to get in. But that took 20 years for that nostalgia and that look back to happen. In the S&P, it happens in 2.5 weeks. Okay, so just realize that 200-day moving average still going higher. That ultimate support at the mark of the beast, 666. When will this hit ahead? Again, this is all clear blue skies. I need to see these candles get smaller, say, flat days to up 5-10 bips, and then a small negative to digestion. But I see this somewhere cresting maybe in the next, 2-3 weeks, somewhere to around that 675 level. Maybe something happens geopolitically and Iran says, I don't know. Who knows what happens? Missiles go somewhere. Who knows? But and that drops you probably to the 50 RSI mark. It still holds a 200-day, and the bull market is still intact. Again, we were looking at this the whole time. We said we wonder if the S&P is going to break under the 200 moving average, and if it still continues its slope or really starts to go lower, put in 6 to 9 month lows, and then start to have a flat and a very heavy 200 moving average. That never happened in the 2-week ceasefire announced on April 8th, or technically the evening of April 7th, was everything that the market needed to get it back to prior levels. It held literally, truly every moving average since then. Beautiful doji on that day when it gapped up 2.5%, and it's been significantly green since then, above 50 RSI, overbought today. So the pullback, ultimately, whenever it does happen, will probably take it to 675. That's your 21-day exponential. That factors in a lot of the recent vol. And I hope you can hear me. I hope the audio is working. I'd be stinking if I'm saying all this for nada. Anyway, yeah, so let's get into the charts. There's some big things here. Let's get into it. The real big movers. All right. K to the R to the E, regional banks. This thing is always so dramatic. It always flips out and breaks down to the downside. And when it goes to the upside, they love buying it. It's, ultimate, very big on a risk on, of course, in terms of rate relief. And rates have moved a ton today. So KRE here, one sec, my thing is going kerfuffle. Can you see that? Boogity bang? Yeah. All right. So KRE, this is going to be a little bit tough, in terms of charting a lot of these instruments just due to where we are in market. So again, KRE peaked in early February 9th at $74. You see us here at $71. Really similar to what happened to the market. So many pieces of the market got all the confidence back. And that's visualized by holding above 50 RSIs. And basically, it's just for so many areas of the market, X energy, since March 31st. So this is very profound strength for about, 2.5 weeks. Great looking candle. We're highlighting it today because it's up 3.4%. That is nearly 3 standard deviations for regional banks. We'll see what happens at this level. But yeah, next stop, it is trying to target those ultimate $74. This is a massive candle. I would have to see this trade inside of a 1.7% move contraction on Monday, and then see what it does on Tuesday. Like I said, when it gives back, it gives back. But this has been great. It hasn't had green days just ad nauseum like tech. It actually had a couple of flat to down days this week, so they're finally pouring in it now. Rising 200 at 64.70. Looks great to me. I think it's a little bit like toppy right here, but again, these candles are telling me the story that it wants to go a little bit higher. They're not done yet. View up on the day, 70.57. They said, give me that. High of the day, 71.44, just 20 cents off from where I'm talking to you now. So great looking chart. Yeah, in terms of consolidations, yeah, probably the next 2-ish weeks, this will drop to about 67. And then if you don't have a position, it probably is not a bad way to express along. All right, next, that's up 3.5% today. Again, when oil drops so much, retail has a huge relief. They can go and drive to Ross and buy things they probably don't need and put it in pay for storage spaces they probably don't need, but that's not everybody. So XRT, it's interesting. This peaked on January 22nd at 91.65. This has had a bad, obviously extremely related to the war because of the price of oil. This thing got plunged all the way to oversold, hit $78 essentially. And now this is just experiencing it's now 2 days now above a 200-day moving average. So this is just joining the party here is XRT. The problem is for me is I see significant heavy resistance. Very interesting telling on the market, but with all-time highs as your tailwind, it would usually lift a group like this. XLY also leading today in terms of sectors, or very near the top. To me, there is resistance here at where it is right here. I'm curious if they want to fill into it here. Look how messy this area has been. I'm talking about from January, actually way prior. You can see right here, where I'm talking about this 87.5 level has been something that's contended since Labor Day in terms of when it first captured it and then got to its 200 moving average and then 52-week highs. And then look at that, dropped right back to that area of the former 200-day moving average, though reaching oversold. And now above a rising 200 moving average at 84. I think 84 gets a little potentially wobbly. I don't know. I just see in terms of the candles, I got to see right now, VWAP 86.86. They like that. High day 87.70, just 30 cents off that peak. It could have a little bit more to go. Like I said, this rally started back here at about 79, and I'm a cycle guy. So if this started off a piece of the market, we're going a little bit long in the tooth, but I just think in terms of market, still digesting. There's a lot of strength, like I said. So you got to go in the internals and count, as my buddy JC says. But yeah, I think it has a little bit more to go, and then it'll be a level to contend with at about $89. If it zooms past 89, this is absolutely a true risk-on environment, and oil's likely going lower, and they're sniffing that out. Okay, and another one, of course, in terms of the rates relief, home construction, this starts to look better, right? We highlighted this a while back. This is up almost 6%, a massive move for home construction here on rates, just absolutely dropping. I mean, if you look at TLT, it's up 85 bips. But back here, this is tough. This rally again started here at about $88, and we had said this before. I think maybe 2 weeks ago. Let me check my notes right here. I said this probably looks decent and moves towards. The stock was trading at 88. So let me put my cursor. we'll make an example of this one. Yeah, basically at the lows here. And I said this looks good for a dead cat bounce to about 98. And then that's when the going is going to get tough with the overhead resistance at basically, I'm looking at the chart here, like 99. And voila, today we're at 99. The 200 moving average is going up by about a penny a day. Essentially, that's flatline to me at 102.34. You're going to have a little bit more to go, in terms of this chase. Up 6% is massive, so institutions and folks are off sides, even though it's not massively trading in terms of volume today. But yeah, I think this is going to be magnetized. View up on the day, 97.84. It's holding that. It is 70 cents off of high of day. It probably has a couple more days to head towards 102, but I wouldn't chase it there personally. I probably want to. You could probably sell these, 94 puts. I don't think you're going to get paid for that, though. All right. X to the O to the P is the biggest loser. Let's keep moving on here. It's a lot to cover here. All-time highs in many areas. XOP not enjoying that, obviously down 5.4%. Again, I was writing about last week that it is an absolute risk to be holding on to energy, holding on to laggards here. And that's exactly what happened. This group peaked on March 30th, exactly when this rally started across industry, right? So that was, it was still overbought. The chart looks great here going into that March 30th. And of course, the ceasefire happened. So that changes things. But look how they dropped it here all the way down to a 38 RSI, which is where we are currently. It's basically the lows it's been is 35 throughout the past year. Is 160.15. They don't seem to be interested in that. The low was 154. It did bounce off the floor there. This is not the day to hop into this one. We've been talking about oil overall will be a buy, but you could pick your spots because it's not the environment with S&P hitting all-time highs because of the backdrop, especially geopolitical risk premium winding down there. So I believe this will base somewhere between, honestly, around 165. I think it's going to pop up here in the next several days. I would love to, if you want to buy into strength, it's probably going to be a little bit later, like, I don't know, a week or two once the euphoria animal spirits subside. Have this close above 171. That's your 21-day exponential moving average. Synthesizes and really factors in a lot of near-term volatility. It should correspond with a 50 RSI. You'll see the buyers take control, and then that should have your target set back to 190. So I'd rather buy into strength than picking the bottom here and being a hero, though the chart looks great. It's held the rising 200-day moving average since Martin Luther King Day. So really amazing strength. A lot worse place you could be. Right now is the day not to spike into it. Get it off the mat. I think it will. Once it closes above 171, I would probably honestly buy something like the August 190 calls and then sell, whatever 2 weeks out, 190s against it in XOP. There's going to be a lot of haters in this, and I think they will come back. But right now, as I said, not the time to do that. And in terms of puts, you can probably, I still don't hate the idea of selling the one. There's risk to it, selling the 160 puts and buying like the 159s against it that expire next week, something like that. Next one, these are all energy, obviously, that's getting hit today. XLE, I'm not going to spend too much time. It's exactly the same chart, essentially. This one is almost basically at the lows in terms of RSI, also in terms of itself and momentum. Stochastic momentum mix as low it has been. Things look good here in terms of getting the same thesis I had for before. Top to 63.5. They dropped it as low today to 53.5, essentially. And now off the mat. I think this might reclaim VWAP at the end of the day, and then this could be a little hammer formation. But as I said, XLE, I'll give you the levels. I'd rather see that close into strength. You got to have like some sort of wind up there in the Mideast again. But I'd rather see this close above 58, not chase. And then after that, I would probably go into something like the August 63 calls. Sounds crazy, but that would be the way I would play that there. And also sell something against, again, always 2 weeks out so you can sleep at night. Sell the April or the May, because April expires today. Sell the May or even a weekly out, 2 weeks out. Same strike, 63s. There'll be vol to it due to the decline. All right. And if you're nuts, you can also, I would think, don't do it today, but you could probably sell the 55 puts against it. But wait till it's in the money, in my opinion. And then you can also do that against the spread. Woo! All right. U to the SVO. Last one to close out. The energy losers down a massive. How can we not talk about this? The bell, opposite of the bell of the ball. The reason why many of those areas are rallying is USO is down 8.8% live right now. It's been volatile. It was down 9.8 when I wrote. This is going to need time to base as well. It is at the heart of the storm here. Interesting to note, the low today dropped it to the 50-day moving average, and then VWAP clean 117 on the day. Right now they say no thank you. It's at 115 and is below 50 RSI. This is very interesting. It is under 50 RSI for the first time since January 7th. And if you remember, that's when we had the whole Venezuela capture thing. So very interesting where this goes. I think it's going to need time to base. Similar thing, 21-day exponential moving average. Wait for it to close there. If you believe this is real and you still want to invest in the story, wait for it to close above 122. And then honestly, it's headed towards about 140. If you believe this whole thing still works. And that's what the chart would tell me. But I don't want to be a bottom feeder. This looks like this candle here seems fractally the same as this here in terms of the hammer sticking in. It went kind of lower 2 days later, and then boom, another huge run. We'll see what happens here, but that's what the chart looks like. Again, those are my levels for all those. I wouldn't chase it right now. Instead, I'm buying, SOXX beta. Let's look at how they did that this week. The best trade of the entire week. If you thought the way to capture all-time highs, the absolute cherry on top, the Sunday really getting the alpha, it was playing Ark. When you talk about the rubber band, right, in terms of S&P being up 5% this past week, 1% a day, that's crazy for an index. You look at how the rubber band got especially wound in Ark. March 30th, 63.5. Today, 79. This thing has been in hell. I'll downgrade purgatory to Dante's Circle of Hell here. From February 2nd all the way to April 15th, a 2.5-month bear market. Wasn't massive in terms of the spot. It was pretty big, $75 down to $64. And now it is above a rising 200-day moving average at 77.5. Is Ark. I think it's running, significant. This goes with what I said earlier about the levels it's running into with that other instrument earlier of, I think, home construction. Yes. But this is different because the 200-day moving average is still going up by about a nickel a day. There's certainly traffic at this $78 level. Let me put my cursor here so you can see. Right here, it's an important level that it's dealt with, honestly, going back since last summer, since July when it first encountered it. And again, don't forget, Ark peaked October 8th at nearly 92.5. Possibly this thing gets to 83, but again, don't forget, trees don't go to the sky. This rally started at $65. Look to see if these candles get smaller. But again, this was the best high. When I say best, literally the highest performing. This is up 15.5% this week, an average of 3% a day. Today, doing just that and eclipsing or just about reaching overbought for the first time since the day of its 52-week highs, all-time highs back in October 8th when we had a $92, $93 spot for Ark. In terms of plays, yeah, I'm just going to skip over that one. If you're in it, again, if you want to chase the ATR, I mean, momentum is your, trends is your friend until the end where it bends. Right here, the ATR is 270, so it's wide. You're going to be about $5. You can chase it right here. Be careful on VWAP. Let me get this here. VWAP on the day, 79.11. They're holding it. The high was 80.5, and then they backed off. So be careful how exuberant it gets. Like I said, very important level, critical, important of level. See how it takes it out, but there's definitely traffic here at 80.5. Yeah, so again, if you want to get in, you can chase it. $5, it goes against you. Get out should it drop below $74 because it could very well head to 71 very, very easily. But that's not what I'm calling for. IGV. Next, number 2, best way to play this market. It was very close. Obviously, Ark is correlated to software. IGV up 15%. It's 14.5 versus 15.5, respectively, for IGV and Ark. I've been calling for the death of this. Again, talk about important levels. Kind of a nasty-looking candle on the day. I know it's up 90 bips. It is just giving away VWAP, which was 85.5 on the day, and the high was actually 86.51. So let's see how this closes. 52-week high came officially last Friday. This thing pierced through $74. This could have a little bit more, just do it in terms of cycle and the rubber band going far, but do understand this has a lot of traffic at 88. I wouldn't personally be, chasing it there in terms of weak area. There's a lot of momentum in terms of other areas of the market, but always folks want to, do a little reversal trading because it's contra and the rubber band can go very fast the other way. You can make a lot of money. Right here, I think this looks like it wants to head to that 87 level. I don't think it ain't no thing for it. And again, I want to see how it closes, but it's been doing 3% a day. Today, it looks like the trend's weakening a little bit. Salesforce, Monday.com, a lot of these crap companies, honestly, that seem to be on their, I don't know, at least through a vicious reprice through the end of 2027, have had massive rebounds. I'm very interested in seeing its 4-day winning streak of green plus above 50 RSI. This is very important. When it had that flash in March, the first week of March, it held a 50 RSI for about 3-4 days. Right now, this is about day 3. If it's about one day, a trend does not make. If it's here, above 50 RSI for about 5 sessions, 8 sessions, that's more than just retail buying the dip. That's institutional potentially confirming it, and that's what I would like to see. I don't think it happens. I think it hits the 87. They Dikembe it. Rest in peace, Dikembe. And again, don't forget the 200-day moving average is falling. It's at 102 here. Okay, pal. So I would not. I'm not chasing this by any stretch. But I'm just highlighting it. It was up massively this week, and again on Young, up 10.5%, up 2% ish a day. New all-time highs today on EWI. I will be including it very soon in the total portfolio. I am fully capped essentially through correlation caps, through the rules of total portfolio trading. So I can't take on any new positions right now, but I do love EWI, as I always state. I might do something by the end of the day and shed a little bit of Brazil because it hasn't really been crushing it. It's still hit the 2-week highs today, but a lot of other players have more velocity. So again, we have been seeing, and I talked about it a couple of weeks ago, and I thought it would still happen in Korea. I said, when's it going to take out 153? I hope to join it. That day finally happened today, but did it touch 117 first? Yes, it did. EWY up about 2% a day on average today, bucking that trend up 3.25%, getting strength, momentum breakout. Oh man, breathe. ATR on this is 620. You could chase it. If it moves against you by $12, under 140, get out. Save yourself about $5. It might head a little bit lower to about 135, even possibly 132 or 130. But if you're going to do it like me, you could chase it right here, and those are your levels, honestly, for the stops. It would be 140. Targeting, it's a little rich here. I mean, honestly, I had to target for about 150 when it started, like everything else, going up on around the first. So the rally began at 118. Rubber band go far south, rubber band go far north. So same thing here. Look how fast this reclaimed its 50-day moving average. It was an absolute purgatory there relatively to itself. And then boom, this thing's at 67. A little bit of a divergence, not having 70 RSI. I want to see, more than that on an all-time high. Lets me know there could be a visit to 135. Would not be crazy. So that's South Korea, the third best trade of the week. Oh man, I get some water. All right, let us continue on here. A lot of stuff moving though. A lot of stuff moving. All right, let's look at the losers fast. If I already did it, I'm not going to kick a dead horse. All right, top 3 losers in the past 5 days. USO, this trade being unwound before your eyes, down 9% over the past 5 days. Obviously, all of it coming today essentially, but it has been down average of 2% a day. And that's where your 5 days begins. Don't forget, this thing started on Monday at 133.5 was the high. So you're seeing this come lower. I already talked to you about before. I want to buy into strength, have it close above 122 if you need a diversifier in your portfolio. But again, this thing's weak. It's under 50 RSI. This could, visit again, possibly that 105 to 110 level. So I don't want to be a hero with that. The worst trade this week, down average of 2% a day. Right now, obviously, much more than that. Number 2 loser, and this is always interesting, VXX, volatility coming out right before your eyes, signaling, the end of the war as you get multiple ceasefires. Now, again, we had our freak out here March 31st, and that's exactly what we were just talking about. The next day, S&Ps, they started buying them, and the VXX has had a hard time with a 200-day moving average ever since. That is still falling, of course, at 33.84. And it is below 50 RSI. Fear really came out of the market, obviously, with that April 8th announcement of the 2-week ceasefire when VXX gapped down and it closed down 9.6%. Now what for VXX? This is interesting. Don't forget, the 52-week low came when we were in ultimate tranquility in the first week, second week of Jan, at roughly $26. We're at $28.66 today. I think this is going to try and base. Honestly, I see the floor right around 28 even, possibly going to a 27 handle. I don't see the new 52-week lows getting taken out. We're still in a little bit, I don't want to say of a jumpy environment, but we're only down 2% today on VXX. IWM is up equally. So usually you get at least a factor of that, right? Like 2 for 1. See this down 4% if IWM's up 2, kind of a thing. So it's not cratering. I think this will base around the 27 to 28 handle, and then possibly on any kind of a freak out in the market. I don't know, CPI number, layoffs, home construction permits being down, whatever, what have you. You'll see a rally in this head to about that 32 area, but the 200 moving average looks like see you later, as you're getting a lot of strength confirmation in many different parts of the market. VXX down an average or down 7% over the past 5 days for about a percent-ish a day, and today gathering strength in that trend. And then lastly, for the weekly recap, XLE down 4.5%, almost a percent a day. Today down 3%, and we already talked about this one. All right, top 3 trades of the past 5 days, they were all longs, every single one. It was long Ark, long IGV software, and South Korea. Ark coming up now to a 200 moving average, so kind of a shorter term reversal, but rise 200 days, so overall a star-ish performer, but dealing with a correction. IGV still in a significant drawdown. That was your second best gainer, so money flowed to different parts of the risk complex. And South Korea, new all-time highs today. So get that one's a medium term, kind of a performer come upping. And then IGV still an absolute loser, and then a leader, the champion horse, South Korea. Speaking of which, beautiful segue into my next piece. Top 3 trades of the past 52 weeks. Please recognize this. This is hitting all-time highs today, South Korea, and it's your number 1 trade of the past year. This is the proxy for AI memory. Who knew that's where money would be made, in 2027, 2028. They're realizing that now. Looks absolutely great. I told you how to play the biggest mover of the past year. $6 ATR, you could chase it right here. If it drops to 140, get out, look for another re-entry. Otherwise, this could be headed to 160 and beyond. I will likely make moves to enter this. One we did not talk about, but it's ripping. We ripped the other day. Let me see what it's doing today as well. Yeah, up 3.5%. Very strong for silver. I know the chart. I had this chart in my dreams the other day, actually. It's psychotic. So the lower highs scared me, and I came out with like a bullish call in here. I said, silver's getting ready to go. I'm getting ready to buy gold, actually, in the personal account, just because I don't have any. Silver right here, again, this rally began on, and let me point back to when I said this, March 27th. I said I don't think they're going to take off right here, but it was a good diversifier in terms of, especially with the war environment. And right there, we're at 61.5. And I said this should head to about, where were we that day? $61. I said it just head to about $69-ish before the going gets tough. And now here we are at 73. So I think this is going to plateau. Again, the market is very, very bullish, obviously. I don't think they're just going to absolutely grab this. View up on the day, 73.49. It's holding it on a nice up day. The high was as rich as 75.15. This has significant, the $74 level right here, let me just highlight with my cursor, is very important also, just in terms of the highs it struck at the beginning of the year, or reaching the $74 level is also the floor during that earlier March sell-off when the war happened. So again, also this rally started at $61, so a huge move. Again, EWI up 169%, by the way, year over year. Silver just a hair behind that, up 152%. Looks good. I think it's going to head to 74, and then it's going to hit a wall. If you wanted to chase it, it's a clean 3 ATR. So if it moves against you $6, you get it right here at 74. If it gets you to 68, get out, because it could head to like something crazy like $59, $60. And it just wasn't the time for it, if that makes sense. I'm personally not entering right now, but I will enter gold at some point. But silver, you're number 2. These are things you need allocation to in your portfolio, at least correlated in some way. Silver miners, gold miners, South Korea, an international market, for example. And the number 3, the SOXX, and I'm long the SMH. So you got to have exposure to these things. We did not look at this chart, and this is our last one. The S to the O to the X to the X, all-time highs. And look at just the clean breakaway. If you say, like, oh, the market, when did this all happen? SOXX had a difficulty breaking out with above 370. And 9 days ago, it closed at 370. And it's been up basically ever since with velocity, up throughout that, since the 31st, when it got to 315. And they said, wait, no way, Jose. getting close to 200 moving average, which is now at 300 even. We're getting a little bit extended. This still, the candle, they sent it to 417. Yeah, this could head to, about like 420-ish. RSI looks great, confirming the trend. Still green, decent volume. Again, number 3 leader year over year. This is tied with silver, essentially. 152 versus 149 for the SOXX. Pullbacks will take this to about 365, and you should buy them. We invest in the future. Technology is how we play for the future. Semiconductor are the chips that go into that key makeup. I hope you have an absolute wonderful weekend. All-time highs. Enjoy it. Go look at your statement. Cheers.